What's going on, everybody? It's Jeff here. Welcome back to the channel. AMC consolidating nicely at about that $58 to $59 level. I was taking a look at the level twos earlier, and I really didn't see a lot of shorting happening. There were shares being borrowed and given back, but just because they borrow shares doesn't mean they were directly gone to shorting. I wonder how that coincides with the new NSCC rule filing coming into effect today. I'm going to continue to monitor that very closely over the next coming days and weeks, especially the options chain. If you've been following me for a long period of time, you know that I absolutely love options. They can be insanely lucrative. I've made videos trying to help you guys to find the best time to be able to buy call options, especially because their price can fluctuate insanely in just a short period of time. But in this video, I want to talk to the guys and gals out there who have their tendies in their hand waiting to buy the dip, and how some of you guys are missing out on a great opportunity to get a much better cost basis. I'm going to explain it very briefly in this video, and you can utilize this strategy even if you don't have cash on hand right now in the future with plenty of other stocks. There are only two things that are required. You need to have the ability with your broker to be able to purchase options. And then you also need to have enough cash on hand to be able to buy enough of these shares. So if you only have $60 or $120, maybe $180, maybe this isn't for you, but keep watching, because one day, once you collect all your tendies from AMC, you're going to want to utilize this strategy with many other stocks going forward. So let's get into it, guys. First off, we are going to be taking a look at Robinhood. I still have a Robinhood account. I don't really use it. I opened it a long time ago because a lot of people in the Discord and other people that I've connected with utilize Robinhood, and I just think it's visually appealing. I do have three actually Leap contracts with AMC, a $14 and $15 Leap, that are printing pretty heavily right now, up over 700%. I'm going to let those babies ride out a little bit longer. But let's dive into what I want to talk about in this video. So if you're sitting here right now, you're looking at AMC sitting at 58.26, and you're saying to yourself, if it gets to 55, I'm going to buy more. If it gets to 50, I'm going to buy more. Well, instead of having your cash sitting there doing absolutely nothing, here's a different strategy that you guys can use that will actually take your cost basis much lower than $55 or $50. So you're going to jump over to here. Take a look at, we're going to jump into the options chain. Take a look at this. One thing I've pointed out, if you've been following me for a long period of time, when you are buying options and the implied volatility, which for AMC is very high, okay, that is a negative catalyst when you are buying options. The reason being is because it's directly factored into your premium, so you're paying a much higher premium. However, guys, the inverse is it is the inverse when you are selling options. So if you jump over here to sell options and you're going to sell a put, okay, because that is a bullish event, look at this insane premium that you can collect right here. And this is only going out June 25. Take a look at July 2nd. If it gets to, whatever your strategy is, if it gets to 55 by July 2nd, if it gets to 50 by July 16th, whatever your strategy may be, take a look at this. If it gets to $55 anytime before July 16th and you get assigned, you could purchase 100 shares of AMC for $55 minus the 1078. So if you take a look at this right now and you continue over here and you're going to be doing this for one contract, you could immediately collect $1,078 right now. Now, if AMC never gets to $55, or let's say it gets to 56, 57, then pumps up to $70, you might be sitting there in another position and say, okay, if it gets to 65, then I'm gonna add to my position there. But if it never gets to $55, well, you just added almost $1,100 towards your portfolio. So while you're keeping your tendies on the side, waiting to look for that awesome barbecue sauce or honey mustard to just dip it right in, utilize that money to your advantage. And if it did get to $55 or $54, and you did get this assigned to you, your cost basis would actually be $44. Okay, because don't forget, you get to keep that entire premium you already collected. So you're buying AMC that at that point would be valued at 55. You're buying it for pretty much $44. If you don't want to go out that long, you could take a look at the July 9th and say, you know what, I'm only going to buy if it goes down to 50. That's fine. Take a look at this. You can immediately collect a premium of $558 right away to your portfolio. So you're using your cash on hand, okay, as a way to generate income into your portfolio. It's something I talk about in the group all the time. I have a full options course down below. It's the first link in the description. It's got like 3.5 hours of a numerous different strategies, and I cover this one in insane depth and draw on the whiteboard everything that you need to know. But I'm always trying to insist on people to utilize your cash on hand and to utilize your portfolio as an income generating portfolio. It's not just looking to build it, you're also looking to build that monthly income on your portfolio. You can take a look at any of these. July 2nd, if you're like, you know what, it's insanely volatile, I don't know, I'm only going to buy if it goes down to 45, that's fine, as long as you have the cash on hand and you're willing to wait. You know that you're going to buy AMC stock, you have the potential to buy AMC stock, okay, you have the funds there, you can literally sell a cash secured put. And if you look at this, guys, like I said, the implied volatility is really high. Okay, over 200% is pretty high. Okay, therefore you're collecting a great premium for this. And like I said, you get to get AMC at a much better price. If it never hits it, that's fine. You just collected more cash and you move on to it. Now, if you're thinking to yourself, oh, well, you know, AMC, if you look at the charts, guys, we'll jump back over here. If you look at this chart, the 30-day chart, the lowest we've gone down to, we've hit it 3 times, is about that $43 level. If you're looking at it on the 1 hour, excuse me, and we're continually stabilizing right here above $50. So you can comfortably say that we don't see this stock continuing to diving down. There's a lot of stabilization and consolidating happening right now. We are really staying inside that channel. But like I said, the point of this is one, you're going to be able to get a much better cost basis. You are utilizing your portfolio as an income generating portfolio like it should be. And you have the opportunity to get AMC stock for a much better cost basis. So guys, that is going to be it for this video. I hope that it gave you a totally different perspective, especially if you're sitting there, you're saying, you know what, I want to add another 100 shares if it gets to 55. I want to add another 100 shares if it gets to 52. I want to add, well, utilize this strategy because you're going to get a much better cost basis. And you have the potential, if it doesn't dip, okay, if it doesn't go back down to your dips where you want to buy, then instead of the cash that you're hanging on to, you're still going to be hanging on to because it didn't get to that price point. You now have more cash to be able to buy even more shares as the time goes on. So take a look at it. I hope this helped you out. If you're interested in learning more, guys, first link in the description. We'd love to have you. I'll see you in the next one.